So this is the three phase of the market: uptrend, downtrend, and sideways market. How do we know it's uptrend? Price is giving us a break of structure, creating higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then here we have what we call change of character, or we can title it shift in market structure. Why? I will explain. The price begin to give us lower high, lower low, lower high, lower low. So when you begin to see lower high, lower low, lower high, lower low, lower high, then you know that we are in a downtrend. Then when you see price, after market have trending, it's like when it trending very well, the market we enter we call sideways market. This is sideways form, then it manipulates. So this manipulation is called liquidity. So let me label it. So this manipulation now is called liquidity. Though I may not go deeper in this club. I just want to show us something to. So let me just start with like that. Now, first and foremost, when you come to your chart, yes, when you open your chart, you don't just go to 15-minute time frame and just say, this is buy, this is selling. You just play straight without seeing the narrative of what the higher time frame is doing. Do you know what the daily time frame is doing? Do you know what the weekly is doing? Do you know what the 4 hour is doing? Then you can now, if you know the market order flow of the higher time frame, you as a trader is for you to trade in line with the higher time frame order flow. So it means that if higher time frame is saying we are in a bullish trend, for example, we are breaking structure. So all you need to do as this pullback is coming is to wait a line when this we can now go to 15 minutes and wait for when this pullback that is selling on 15 minutes change toward an uptrend. Then you can now look for a buy. So now we break it down within 5 minutes now. So first and foremost, I am in a daily time frame, for example. So let's say I'm in a daily time frame. This chart is a daily time frame. The market order flow of the daily time frame is showing me a break of structure. So now on the higher time frame, you can see when price take out the first high, it means that he has breaking structure. Structure means he has taken out the previous high. So this high now become a valid high, and this low become a valid low. Why this low become a valid low? It's because price has taken out this high. So now this low, price has nothing to come and do with this low again. This now become the low. So this low now become our market range that we are trading with, and price are giving us another breaker, another high. So we are now working between this high and this high. So what do you wait for? You wait for a pullback. Let's say we are in 4 hours. A pullback that will come to this range before continue. Now, in smaller time frame, this is what will happen. So we have a major swing. We now begin to have what? Fractal. We now begin to have what we call fractal. Fractal. We're going to have maybe in 1 hour or 15 minutes, we will have market giving us a downtrend. Then it will not change. Then when you now see the change, let's say you want to trade in a smaller time frame, then you now wait for this formation. So now let me move this. So look at this. Look at these charts. This chart is a fractal of what this leg that you see on a daily, they are just coming down the, this is what it will be doing in 1 hour. This is what we call fractal. So you know that you want to buy on this leg. Let's assume that you don't want to counter trade, but you want to buy. Now, that's where your order block begin to come. Let's say this is your order block. That is your order block. Then price, which is your demand area. So you can say that I have nothing to do with support and resistance here. So after breaking of structure, there's a what we call order block, which will stand as a demand. What is order block? The last candle that caused a bullish trend after a consolidation is the order block, like this way. So we have price. All right. So we have this, then we have price doing like this, a consolidation in a smaller time frame. We have sell, then we have boom. So price has breaking structure. You see, the last candle that caused that break of structure is your order block. It can be red, it can be green. So this will be my order block. So we also regard that word as a demand area. So whenever price return to the demand, then that's where I want to buy. So now you can do two things. For example, you can do a buy limit on that demand. You can do a buy limit like this. So whenever price come to that place, it tap you in and it continue. Or you wait for price, as it's coming to demand, you wait for price to give you, now go, maybe you are in 4 hours, you can go to 15 minutes or 30 minutes and wait. You know, this leg is what we know as a retracement leg in the higher time frame, but in smaller time frame, 15 minutes is actually causing another break of structure. You now wait for price to give you another a change of character of 15 minutes. So like this format, then so this will not be the kind of trade that you want to. So this will call what we call confirmation entry. There's aggressive entry and there's a confirmation entry. This one is aggressive entry. This one is confirmation entry, whereby you allow price to enter your POI, go to smaller time frame. If you are looking at 4 hours, go to 15 minutes. As price enter your POI, what is your POI? Point of interest. POI means points of interest, which is whether your fair value gap or your other club. But for the case of this, my students that are here, I don't want to take trade from fair value gap. I will only work with demand and supply. So I will advise concentrate more on demand and supply. Leave a fair value gap. Every valid order block must have fair value gap and it must cause a break of structure. So that fair value gap is the one that make that demand, that order block a valid. So it's the one that is a fuel, it's a magnet. The fair value gap is a magnet that will draw price to that demand or to that order block. So just concentrate more trading from demand and supply, which is the order block that breaks the structure. If you want to learn more details about this, then we can talk about it later. But for the sake of people that have learned, that have passed through my class, that I might just explain this into. So you now wait. So if you can do a buy limit, this is aggressive entry. But if you don't want to do aggressive entry, you cannot do a confirmation entry. Allow price to enter into your POI, come to 15 minutes, wait for another change of character, then before you take that trade. Now, what is the difference between this aggressive entry and confirmation entry? Aggressive entry You can, number one, you only go with a minimum of reward ratio. And number two, the disadvantage is price can come, sweep liquidity here, and then hit your stop loss and begin to reverse. But advantage of it is that you will cash more trade. You will cash more trade than confirmation entry. So the disadvantage of confirmation entry is that you will miss more trade, because not every trade that will, when you enter your PY, that will change character. Immediately it hits your order block, you can just see a long movement. The price will just go without changing character, so you miss that trade. Then why did the advantage of this is that it's a confirmation. Once price enter your POI and it change character, then and you allow, after the break, after the change of character, you now use the what? You now use the order block now, the demand of change of character. That this will now be your trade. So this is a confirmation now that price is ready for, it has changed from the downtrend to an uptrend in direction with the higher time frame. So this will not be your buying. Then your stop loss will be smaller than aggressive entry, and you have more reward ratio from here to here. If it's giving you 1:3, this one can give you 1:8. I tell you. So these are the difference medium of how you can trade. But wait for trade in what? In direction of the uptrend. So now we are entering our trade. We have another break of structure. Then now, price create another structure, another low, but price refuse to create what? A higher this thing. So after price have break this structure, then we are now working with what? With this low. On no occasion that price break this low. Whenever price has break this low, then it means that this uptrend has been violated. But you see price not break, price push up. But something happened. After price has break another structure, it create this low. Price should have given us what? Another break of structure. But what happened? Price fail. Then what do you see? Price break this low. This is the last standing low that price must not break. But immediately price break this low, this has become a change of character. Change of character means shift in market structure. Market is uptrend before, but because price has taken out the standing low, it has come. So we are now changing from uptrend to a downtrend. So you're no longer looking for a buy opportunity again. All you are looking for is a sell opportunity. That is what change of character meant for. Changing from uptrend to a downtrend. So we are not looking for opportunity word to buy, to sell, not to buy again. So the same formation that continue here will continue here. So after market have changed character, market will go back again. Impulse and the correction. So you want to sell for the correction from as price come to what? Let's say this is your order block, your demand, price enter your demand, the price do what? Break another structure. Then price do what? So demand tested, fair value gap open, another demand tested, until you continue looking for a sell opportunity in line with the higher time frame. Until price, now this is our last standing low high, right? Look at this place very well now. This is our last standing lower high. But what happened that caused a break of structure? Now, after price has breaking structure, instead of price to give us, price enters into ranging, price range. Here, you are not doing anything. Price is ranging. Then now, this is the high of the range. Then what happened? Price came down as if another break of structure. But what happened? You see a sharp movement. So this is liquidity. What happened here is that price, all the stop loss, buy limit, buy stop loss, all the limit order that is here, they came back, price came to sweep, to take everybody out, and price was reversed. And here now is no longer our last standing low again. This was our last standing high, lower high, that caused this sweeping or break of structure. So now you see price break this structure immediately. So what we now do on the same higher time frame is wait for price to come back, then before you buy again. So this is what you need to know. And this is little I will share more about market structure. If you want to know more about market structure, then we get that one in a class of itself. But I just want us to have understanding about how market structures work. So now let me quickly use charts to do an example. Then we'll now look at other things that we need to look at. So let's look at this GBP NZD, for example, that I'm looking here on my charts. So let's start looking it from here. So look at this GBP NZD. Let's start from this low. So we have this low, we have this high. So we have this, we have this, we have this, we have this. Right. So now look at it. What do you see? You see price give us change of character, break of structure, a little retracement. So even before then, there's one here. This, the price came back, break of structure, pull back, the break of structure. So this is the last low now. This was the last low that price creates before moving this up. So on no occasion that this low must be violated. But what do you see? Now, this is a fractal low, but the main structure is this low. This low, the price creates this, it creates what we call a fractal low, which is a little structure, they create high. Instead of this guy to create a higher high, what happened? Price begin to come down. So initially, this is where we have the first change of character. I want to point it out. So that's the place we have it, because this low, this high is lower than this high. So we have higher high, we have lower high. Price violates it. You can see that price is not return back high again. The price begin to give us. Now, these 4 hours, if you look at this guy on daily, we discover that all the sell we are seeing on daily, the overall this thing is still what? An uptrend. Look at it on daily. That's why we must understand the daily order flow. You can see that we are breaking structure on daily. This is our last, and that is where I love to look at market from daily first. So on daily, this is the last high, the last low. So it means that this is our market range on daily. So this is our range here. This low, you must define your market range from higher time frame so that you know what you are trading with. So we are trading between this high and this low on daily. As price has got into this high, this is a pullback, a daily retracement. So all you need to do is to pull your Fibonacci and wait for price to come to what? Discount. Anything, it doesn't mean that it must be 71 or 75. Anything below 50 is discount, which is buyer territory. Anything above to this is premium, a seller territory. So we want to buy from a buyer territory. So we allow, as price is making pullback, don't buy anything above equilibrium line, which is the 50. If you buy here, see what will happen. Allow price to come. So on daily now, we are waiting for price to come to our POI. So what's our POI on daily? So let me delete this. Where's our POI? The other block that breaks structure. So this O now, this everything here is our other block. Everything about this candle here. Because this is the candle that break. This is the candle that breaks structure, not all this one. This is the where the bullish commence. So you can see that the price has tapping into what? Our POI on daily. And also we are in what? We are in a discount. So, but I don't want to do a buy limit on daily. So we know that we are in an uptrend. I am not selling this. All I am waiting for is for price to give me a change of character, for me to align this buy, to align with the uptrend that I want to buy. So now, look at something. Even on daily now, so let's not read. I can read candlestick as my fractal. So we have price, we have this low, we have this high, we have this low that comes back. So this is where we have a fractal change of character called. So when you go to 4 hours now, let's reduce to smaller time frame, you will now see clearly. So you can see that we have a change of character now. So on 4 hours, you can see, if you read this price action from 4 hours, you can see that we are bearish. We are bearish. But we are looking to join the daily buy, to join the big boys that want to buy. And price has tapped into our POI. All we are waiting for now is a change of character in a smaller time frame, which is, daily. We 4 hours. We have about 4 hours candle to make a day. So which is very lower to daily. So you can see now that we have a change of character. So trade number 1, all I am waiting for now on this setup is to wait for a pullback into this, my other block, to buy this guy. So now I can do 2 things here. The first thing, I can do a buy limit. If I want to just to take aggressive entry, I will do a buy limit. I will put my stop loss below the swing low. Now, what is the place of liquidity? You see, when price was here, price go up, form this low, come up. This is a range. This is a range market that I point out the other time. This is a sideways market. You can see all this sideways, we have this candle manipulate all the stop loss that is here. Then before we have this reversal. So this liquidity has been taken care on no account. Now that if price is coming down, that is coming down to this low, is very, very, is rare for price to come back and take this low. No. So all we see now, this is called A+ setup. Allow price to come into your demand and buy. So I can do a buy limit like this, and I just forget this trade. That is 1. Number 2, I can wait for a confirmation. Okay, I can wait for a confirmation entry. So let's say we are doing the first one, a buy limit. Our stop loss will be around 100 pips, right? There we are targeting, let's say we are targeting 220 pips. So now this is aggressive entry, but I want to do a confirmative entry now again. So what will price happen? I'll go to smaller time frame. From 4 hours now, I can jump to 15 minutes. Now price will now begin to do this what? Again, on 15 minutes. This is what price will be doing. And price will not tap into this other block. There, I wait for this. I wait for this. Then I wait for this to happen. So price have tapped into my POI. You can see on 15 minutes, we're having a downtrend, break of structure. Then on 15 minutes, let's say I now wait for a change of character again on 15 minutes. So let's assume this is my my demand, which is my POI, my order block. So I will not take trade from here. This is I want to take a trade now. My stop loss will no longer be low here because my stop will not be here. Unless I want to target the same high. The same high. So this will not be my trade. So as price come, tap me in, the price come like this. Now let's compare these two things now. The same trade here, I have 100 pips stop loss, but the reward ratio is just 2.5. Price tap me in, he hit my take profit. I made 2.5. But here, the same way, the same trade, on confirmation entry, my stop loss is 41. Which means the lower my stop loss, the bigger my loss size. Let's say I'm risking 1% of my account. And the trade hit the same take profit. Here where I'm making 2.2 R, let's say 2 R. Here I am making 5.8 R as take in my account. Risking 1%, making 5%, up to 6%. But here, aggressive entry, risking 1%, making 2%. So you can choose either of these two to trade, to enter your position, as long you have seen a confirmation. I hope this is well understood. So please, those of us that be in trading, we can put this medium into practice. I will continue to do more on this until we get it. And if you wanted a deeper knowledge of this, you can contact me. Then we'll talk how you can get a deeper knowledge about these market structures. So thank you for this. So I will now do the business of the day now.